Page Industries has spiked to the high point of the day, and we have Tata Elxsi too moving higher, so mid-cap IT as well as consumption doing fairly well. But one sector which has attracted a lot of investors' interest is the capex sector. A lot of them believe that maybe the capex cycle is turning. So let's get chatting with Sorab Agarwal, the ED of Action Construction Equipment, to actually tell us whether the capex cycle is indeed recovering or not. Because remember, majority of their revenues come in from cranes, and cranes are required everywhere. So that's the question we'll pose to Mr. Agarwal himself. Thanks a lot for joining in. Wish you a very happy new year, Mr. Agarwal. If you could tell us what exactly is the demand scenario on the ground, what is your order book? Are new orders coming in?
Yeah, good morning, and wish everybody a very, very happy new year. See, the demand scenario in the whole of current year has been very robust, and we have seen 30 to 40%, 45% rather increase in our order book on year-on-year basis throughout this year. And the same trend continued in the last quarter as well. And accordingly, the numbers have also been, much better as compared to year-on-year. And obviously, most of the demand for cranes is directly and indirectly going into capex for the industry as well as the construction sector.
Okay. What is your order book, Mr. Agarwal?
Can you just repeat that question?
What exactly is your order book?
Can you quantify it?
Yeah, you see, generally what happens in our business is that customers want delivery in a 1 or 2 month basis, and some of them even faster than that.
Okay.
So we really don't have an order book in terms of, let's say, a figure in number, in terms of rupees, but we generally remain booked for about 1 to 2 months in advance.
Okay, all right. So, Mr. Agarwal, you're trying to tell us there is no slowdown, at least as of now. Is that correct?
Yes. There was a dip in the month of November owing to NBFC liquidity squeeze, and certain deliveries and execution was slowed down.
Okay.
In the month of November, but it has picked up very well in the second half of December. I was very surprised.
Okay, so funding problems are solved, you're saying, as of now. You said that the capex cycle is fairly okay as of now. Where are you seeing some traction, from the private or the government space?
See, we sell both to private and government. Government directly forms a very small part of our revenue.
Okay.
But yes, most of the projects are directly and indirectly government funded. So, all of it is related internally. And yes, we also sell directly to the private sector with respect to the hardcore industrial space.
Okay.
So, there obviously it is private investment.
Okay. All right. What about the debt in your books? If you could just give us a sense out there, because I think the last time you joined us, you told us that you were adding capacity. That's why your debt number had gone up. I think it was around 110 crores. If you could give us the updated number, by the end of this year, are you going to be reducing your debt? And also your cranes business, I think your capacity was going up by more than 50%. Has that happened?
Yes. You see, at the end of last year, our total borrowings were at about 78 crores. Mm-hmm. And we had targeted to reduce it to around 40-50 crores. And I think we are well on plan. And we should hit a 50 crore with respect to our debt by the end of this year.
Okay.
And the capacity addition is already underway, and hopefully should become functional sometime in January, mid-February. Yes.
What does your capacity go to in terms of cranes? And currently, what is the current capacity utilization?
See, with respect to cranes, we'll be adding capacity to manufacture about 5,000 to 6,000 more units. So in terms of price, that will translate into about 600 crores plus.
Okay.
And our current utilization, we are working at about close to about 80% as of now. So with respect to cranes.
What is your current capacity? What is your current capacity?
Current capacity is to manufacture close to about 7,000 to 8,000 cranes.
Okay. All right, 7,000 to 8,000 cranes. If you could tell us a little about, a little more about your finance cost or finance expense, because the first half of this year you've paid out around 6 crores in interest, and you tell us that your debt is coming down from 100 crores, so annualized interest cost would be close to around 12 crores. What exactly is your total debt on your books once again?
See, at the end of last quarter, the debt on our books was close to about 108 crores. And which would go down to about close to about 50 by the end of this year.
Okay.
So we should ideally be looking at an interest expense outflow of close to between 11 to 12 crores.
Okay.
Can be slightly lower than 11 in this year.
All right. A little on your balance sheet. I was looking at your September balance sheet. Your receivables are at around 172 crores, while your payables are close to around 247 crores. How are you managing that?
See, the receivables have gone up in this year owing to the increase in quantum of business. And most of our payments are in any case secured by NBFC funding or bank funding.
Okay.
So this is totally secured payment. And it's a normal creditor cycle which we have, from our suppliers and vendors between 30 to 60 days, sometimes even more depending on the supplier.
Okay.
So on the whole, our overall working capital is close to about 100 crores as of now. And which we are further trying to squeeze in by having more effective controls on our inventory as well as creditors as well as receivables.
All right. Mr. Agarwal, your construction equipment business is less than 10% of your total revenues, but the capacity utilization level out there, if I remember right, was less than 30%. Are you having some problems there in terms of the backhoe loaders business? And give us an updated capacity utilization out there.
See, in the last 1.5, 2 years, we brought back focus onto this business.
Yes.
And as a matter of fact, it has started doing really well. And in this current year, we are looking at a 50 to 60% growth with respect to the revenue coming from this side.
Oh.
And hopefully by the end of this year, our capacity utilization for construction equipment sector should go to close to 50-60%.
50-60%, but in the last quarter, I think it was 25%, right? So you're saying that it's improving out here.
Yes, definitely. See, another thing was last quarter was monsoon season.
Okay.
And especially the backhoe loaders and the motor graders and even the road construction activity slightly slows down.
All right.
And with our complete focus on this industry segment, I'm sure that even in years to come, we should be able to do 50 to 60% on a year-on-year basis.
All right. Mr. Agarwal, very quickly, last quarter, the disappointment was on your margins. You said that you couldn't take price increases, input costs had gone up as well. Is that sorted out right now? And from that 7.2%, will we see margins recovering in quarter 3 as well as quarter 4? Second half of the year is more important because more amount of revenues come in, isn't it?
Yes. I'm not very sure with respect to quarter 3 because the steel prices, commodity prices, and along with our selling prices were more or less stagnant. But yes, definitely December onwards, steel prices have cooled off a little bit, only to an extent of 5%. They had gone up by 30%.
Okay.
And even our price increase has been put in place. So we might see a marginal improvement in quarter 3, but I think quarter 4 should be good.
All right. Thanks a lot, Mr. Agarwal, for joining in and giving us all those updates. So that was Action Construction Equipment. Sounding rather confident as far as the capex is concerned, saying that it did bounce back after a bit of a dip seen in November.